Hello, traders, hello everyone. We will start in a few minutes. Okay, traders, so thank you very much for joining again this webinar. I can see that streaming on YouTube is working nice. If you're watching this on TradingView, please let me know. I can see the chat is running on YouTube. So there are probably more attendees on the YouTube rather than on TradingView. Anyway, we will, of course, observe both chat rooms, so we will try to answer any kind of the questions. So, if you will find this video on YouTube interested or on TradingView, please support us, give us a like, leave a comment, and I will make sure to make more of them in the future, obviously. Okay, so if you prefer YouTube, let me know. Well, actually, it doesn't matter. Okay, for me, the important is that we can stream on both places, so that more people can join and watch this stream. Okay, so what we will talk about? Well, as always, I will walk you through some of the major FX markets, and also we'll look at the S&P 500 and DAX. I will also cover gold and at the end cryptos, and if we'll have a bit more time, then I will also look at Apple stock and AMD as well. Okay, so before we go to the markets, as you know, there was a powerful earthquake in Turkey and Syria. So if you are in that region, please stay safe. I think there was more than 1,500 people dead or so. So you never know what will happen tomorrow. So make sure that you live your life as you wish. Okay. Let me start this webinar with the euro dollar. As you know, this market has seen some very interesting and sharp reversal to the downside last week. And the reason for this sell-off was, in my opinion, just simple buy the rumor, sell the news impact after the ECB rate decision. The important is that ECB said that yes, they are, just a second, that they are going most likely to hike the rates even further in March, but then everything will depend on the data. So everyone knows and knew before that meeting that they will be looking for higher rates. So that's why speculators were buying euro dollars heavily over the last few weeks. So obviously when this news comes out, the market does the opposite reaction, because normally big players will take the profits from those earlier expected moves. So it was a very strong reaction to the downside, and still actually expected somehow if we consider that if they said that they will hike in March, but then obviously they don't know what will happen next, well, that somehow sounds dovish because they're obviously approaching the terminal rate, right? So a euro dollar is seeing a very nice sell-off. We have expected this limited upside here in that area because we were obviously uh, we were obviously tracking the fifth wave up here. So this broken trend line now puts the corrective pattern in play. And the corrections, we know, can be very tricky, sometimes can be very simple. Now, always when I look at the markets, I try to go with a simple view as possible. Okay, so for now, I'll try to stick with the ABC pattern, but we never know. Maybe this ABC pattern will later on unfold into something else. Also, whenever the corrections occurs, you should pay attention to the support levels of the former wave 4. Okay, now since the first former wave 4 support level has already been broken, it's a smaller one. Well, we should focus to this higher or bigger pullback, I should say, which is around 105 level. Okay, so that will probably be a very interesting point for a completion of this pullback. You have also the 38.2% down there, which I normally use as a minimum FIB objective whenever I'm tracking the counter-trend price movement. So you can see here that I have a corrective phase and here was an impulsive phase. So I will be expecting a new impulsive phase after this correction is completed. Okay, so we are now still at the starting on the stream, either on YouTube or on TradingView. Okay, so it looks like that there was some stream error. There was a stream error on YouTube or on TradingView. Okay, it looks like there is some lag. Okay, can you let me know here in the TradingView chat if everything works well? It's back now. Okay, working. I'm not sure why is the stream going offline. It looks like that there's something wrong maybe with the TradingView servers or something. I'm not really sure. Okay, so on YouTube, is it working now? Okay, I will try to disable something. I'm sorry for this, guys, but I'm afraid it's not my fault. YouTube is fine again. Okay, perfect. So we are in a corrective phase here on euro dollar. I think that we are in a first wave A. As I said, there is a chance, okay, that maybe this is a wave C of a flat formation. But the reason why I'm looking for this to be starting point of a higher degree cycle rather than ending point of this corrective wave 4 is because last week was a very strong bearish reversal weekly candlesticks. Also, we have seen Thursday and Friday trading at the lows, okay, closed at the lows. And normally when that's the case, it means that bears are taking the control, and looks like that we could continue in this same direction in the next few weeks. Also, if you look here on this weekly basic technical chart, you can easily see that here we broke higher in December above 50 weekly simple moving averages, and then stopped at the 100 and 200. Okay, so it looks like that we are now in a corrective phase after this weekly bearish reversal formation. There's also a nice support that could be found around this 50 weekly moving average, and you can see easily this candlestick we basically move to the upside and then we reverse lower and now already trying to progress lower. So in my opinion, we could be stepping into the corrective phase. Actually, some similar formations I was able to discover back here in March 2020, June 2020, August 2020, and also then January 2021. And each time we have seen at least temporary setbacks. So in my opinion, even here we could experience a pullback, which makes sense if we try to consider what the Elliott waves pattern are. Also, if you look here, I'm sure you notice this important trend line, the major one connected from 2016 2020 20 lows act as a resistance, by my opinion, only temporary, because as I said, this is impulsive reversal from the highs. Now you're in corrective phase, so more upside will be expected after the next or current setback. Okay. Also, if we look now on the next, which will be dollar index, obviously it's inverted, and dollar index is, it's obviously linked a lot to the euro dollar because it has the maximum weight. And if you look here on this chart, okay, I'll actually look at this one. You can actually see here that we found the support very close to 100 area. And I've been highlighting in the past webinars that this level is very, very important when you also have this fourth wave of 2 lesser degrees in a previous uptrend. So now we found a very nice base here. We are reversing to the upside. So I think, again, it's a very nice corrective phase coming, and the nice resistance would be around 104, 105. Obviously, this equals to the euro dollar levels that I mentioned earlier, right? So in my opinion, this pullback could last a little bit longer until we see this free wave recovery completed. So on the other hand, we have to keep in mind what this means for stocks. If dollar will continue to see more strength, there is a chance that actually stocks will stop at the resistance. I know that stocks have seen some very nice move to the upside last week, but as I will show you here on the next chart, you can actually see that so far that the S&P is not breaking these key levels here. First resistance was at 4,170, very important one. We are not seeing this weekly close above that level that would cause maybe acceleration to the upside. In fact, what I see is a VIX index is trading at the extreme of optimism back from 2022 range. Okay, so it means there is no fear in the market, but actually if there is no fear in the market, well, you know that maybe this fear could actually cause the opposite reaction, and markets could actually make a pullback here, especially, as I said, if the US dollar is really to see more gains, which so far is already happening. Okay, so with current position on the US dollar making our just temporary recovery, so far the S&P 500 may not break higher that easily. Okay. Of course, the reason for higher stocks was strong jobs data, and if you have strong jobs and good still economic indicators are still good, but then on the other hand, Fed will still stop the hiking cycle. Well, that's obviously a bullish for stocks. That's why we have seen stocks making some nice recovery. But from a technical perspective, I still think that buy dip is much better approach here. I'm watching this 3,800 as a very important, very attractive level here for a potential flat correction. If we see in the next few days, let's say that I'm wrong and market breaks here above that highs from August of last year, then obviously I would say that wave C or wave 3 is already in progress, and then I could be looking for potential opportunities on the long side on a smaller degree pullbacks. Okay. Also, what will be the most important regarding the Fed rates decision going forward is most likely going to be the US CPI data, which will be on February 14th, right? So that's when we may get more details or speculations if Fed is really going to stop the hikes, or maybe will be something like happened in Australia when you have CPI figures higher. So if CPI, again, inflation will come higher in the US, and you have economic indicators were good, then you know that speculators will mostly put bets that Fed will have to remain hawkish. They will be looking for further hikes, and this could be have some serious can cause some serious bearish swings here on stocks. So keep in mind that maybe this will be just choppy time until we get this data out on February 14th. Also, since I mentioned that maybe the S&P 500 is at the resistance, it makes sense whenever you try somehow to compare the price action with the other markets. I'm looking here at the German DAX. We've been looking higher on German DAX since October, November. Been calling for this impulsive rise, and looks like that this impulsive rise can be now in late stages. Yes, we are breaking this strong resistance at 15,000. Maybe we will see some pullback back to this level before the recovery will resume, or even lower. Keep in mind that this wave 5 also contains 5 subwaves, right? So if you look closely here on the 4-hour, you can clearly see here that I can count 5 waves up. Notice that also latest move came out of a triangle, and we know that move out of the triangle are final in the sequence. You also have a divergence between wave 3 and wave 5. Again, it's a very important indication that bulls can be losing strength here. So again, be aware of a corrective pullback. Yes, there is some very slow price action, not really strong drop, but if the euro will continue to the downside, it maybe we'll see in the next few days stocks coming down, then I think that the S&P 500 will be easily trading below that channel, and that could easily put more weakness in play. Now, when looking at the higher degree chart here, as I said in our Elliott Wave 2023 video outlook, I said that either we will continue straight up from here or after a pullback, but we are in a corrective phase. However, I favor the idea that we are already in a fifth wave here. Why? Because I think that the Fed is approaching the end of the hiking cycle, obviously, and other central banks will probably do the same, and that's bullish for stocks. However, I also have this another interpretation. On a daily chart, it's more just closer detail outlook. This could be a flat correction, but even this one in the short term suggests that we could see some pullback. Okay, so again, another reason why you should be very careful at this level. So if you're a long-term player and you're already in this market, then maybe that it's not important for you. But for short term, I think it's a little bit too high and too risky to look for potential new opportunities here. I just think that waiting on a pullbacks makes much better sense. So I see DAX at the resistance coming out of a triangle, meaning that there can be a higher degree correction coming, and we have the S&P 500 so potential at the resistance, and we have on the other hand US dollar that is already trying to recover. So that's so far looks like stocks could face the limited upside. Now let's take a look also on the Aussie dollar. Now, why bring on Aussie is because, as you know, as I said earlier, there was a jump on inflation in Australia, and we have new rates decision in 12 hours or so. I think it's Tuesday or it's Wednesday. Anyway, I should check this, but definitely it's this week. So keep in mind that this could be a very important driver for the Aussie for this week. Despite a very strong sell-off, if the RBI will say that they will remain hawkish after the latest data, then of course Aussie could easily outperform the other major currencies. But from an Elliott wave perspective, I think that any bounce will be just short-lived. So even if RBI will be hawkish, I think that this will be just temporary bounce for a wave B rally. Why? Because clearly we have a very nice here ending diagonal, very strong breakdown. I was looking for this one very closely last week, and so far that's only first leg of a corrective drop. So I think that this corrective drop is not over yet, and that we could easily see much lower prices. Also, if you look here on a daily chart, clearly we stopped at this resistance. I've been highlighting these levels for a few times. Despite higher prices, I was constantly looking for a fifth wave, and now it looks like this pullback is finally in the cards. Now, from a long-term perspective, I still think that this bottom is in place and that we will see more upside on Aussie, but I favor potential longs after a deeper ABC pullback. So the first support is obviously here at previous swing highs. at 6 right now, right at this level. But since, as I said, on the intraday basis, we have only first leg to the downside, but corrections are always made by free waves. So it means that more weakness should be seen after the rally. So I really doubt that this will be the support that will send prices back to new high, probably just cause maybe a temporary rally for a wave B. Okay, or maybe even smaller degree wave 2 of A, who knows. But the idea is to look for more upside on ASI after this correction. At the former wave 4, that would be beauty from a technical perspective. Okay, let me check my notes, what I have next here. Okay, now let's take a look on cable. Now cable also, as you know, Bank of England somehow dovish, similar to ECB. They were one of the first banks who highlighted recession risk for a few times before any other bank, and that's why pound was somehow trying to lag compared to the others. But still, when looking at this daily chart, I just think that we are now stopping here for a pause, potentially even maybe trying to build more complex right shoulder, and here was the left shoulder, here was a hat, so that's your neckline, serious resistance up here. So maybe we see more choppy price action now, and then even stronger breakout. That would be the ideal scenario. But even if we see a retest of, let's say, 170, I will probably look and adjust the wave count so that I will look for this to be a correction as a part of an uptrend. I still think that is a major reversal. You can clearly see some very nice reversals and spikes that lead to a higher degree recovery each time after this capitulations on pound. So I think that back in September of 2022, this capitulation and big jump in volume is actually normally this type of activity occurs at the late stages of a higher degree trends. So in my opinion, still think that there is a chance for more upside, at least towards the upper side of this diagonal. Someone is asking me, Gregor, did you cover crypto market? No, I will cover the crypto market but thank you for 500 coins here on Trading Field. Thank you very much. Yes, I will look for crypto market, and actually we'll focus on Bitcoin and Ethereum at the end. Okay. Okay. So that's for pound here on a daily level. On the more shorter term look, if we think we are in a wave 4 here, which I believe it's happening, there are two chances at this stage. Either we are in a triangle if we stay here above 118.40, or if this drop will prove to be a corrective. If drop will be impulsive, then this could be even a flat correction. Then you have a very nice support at 1840 level. Okay, so in either case, it's still ongoing correction, incomplete, which somehow makes sense with what we have been describing and talking on the euro dollar. So I think that there's still a chance for this market to rally, to see much higher prices this year. But for now, we are just in a consolidation. The first support definitely here around 1.2 level is psychological level. You're also the 61.8% retracement or projection actually of this wave A measured from end of a wave B. So it's not the 61.8% of wave B, because in a triangle, the approach with this FIP is a little bit different. Okay, so that's the first area of support, but I think that there is room for maybe slightly more weakness here. Let me check to our chart. I think that was a very strong sell-off from end of the last week. Still ongoing impulse, either wave C or wave 3 of a flat as a set of wave C. So maybe some consolidation now, and then watch out maybe for slightly more weakness, but around 1.2 level, that's the key support maybe for the start of this week. Okay, now let's take a look also on gold. Okay, so gold has seen a serious reversal last week. Obviously, the US yields moved to the upside, and that has a positive impact on the US dollar. So metals have seen some very strong sell-off, both gold and silver. But always when you see such a price action, you should maybe revisit some longer term charts and see what we are looking at here. And you can clearly see that that's a corrective price action, an ABC for a wave 4. We have seen a very nice bounce away from the 38.2%. So as long as we are trading here above 2022 lows, I will be expecting an all-time high here on gold. So I think that the current pullback can maybe already be a wave 4 of a higher degree. Okay, I was looking for the first support here around 1870, but obviously we are seeing just one leg to the downside. It means it's the first leg of maybe more complex wave 4. So either we are in a wave 4 of higher degree or maybe wave 4 of smaller degree still. In either case, just be aware of maybe something more deeper here. I'm trying to compare the longest current pullback with the longest leg within this recovery, because that's normal. That will normally be the first important support. Okay, and maybe try to define if we are in a higher degree, corrective wave 4, or lower degree. So here I'm looking for supports around 1840, but still you are now in the first leg. So even if we see straight move down from here, that will probably not be the end of wave 4. You have to see a free wave substructure within this drop before the correction can be finished. Okay, so 1840 is the support. Even if we drop, as I said, back towards 1820, I will look this to be the higher degree wave 4. Okay, that's why I'm labeling this L4. You can see the same cycle as the black letters. Okay, so I think that we are in a corrective phase. There can be room for more downside, but this week still I will be expecting wave B rally. Maybe there will be obviously then limited upside. So 1900 is potential resistance on the next bounce here. Also, let's take a look on dollar yen. Now this one has seen some very interesting moves. So dollar yen has been testing these very big levels for some time. Okay, I've been observing this area of potential support for some time, because we were looking for end of the first impulse that took the price back to the previous fourth wave support. So it looks like that we are now recovering, but again, not really bullish. I think that this will be just a corrective phase. Okay, so sooner or later, I believe that this market will continue down and could see much more weakness in 2023. I'm definitely looking for a top here, so just observing the potential resistance levels. Now, the ideal resistance would obviously be at these levels here. Maybe even some kind of a head and shoulder top formation could play out. But definitely sell a higher degree free wave recovery is the approach here, but not yet. Probably from a much higher prices, because as I said earlier, dollar index is also still potential only in the first leg of this ongoing recovery. So dollar index is turning from a new low, dollar yen is making a higher low. It means that dollar index will move higher, dollar yen will most likely reach even higher prices. Okay, because obviously it's the strongest. So the very ideal resistance would obviously be here, but it could be already the first one around 135. Okay. Also, one of the reasons for a gap, I think it was gap on Sunday, is because they're looking to, as you know, Kuruda will leave in April, and they're looking for some new Bank of Japan president who will actually be also, there are speculations that they will also be very dovish. So that's why we are seeing Japanese yen gapping lower. But obviously, if the inflation, which in Japan, which is here at the bottom, will continue to rise, sooner or later they will have probably to remove this yield curve control, and that would be very, very bearish for dollar yen. So when dollar yen will continue back to the downside, that's when we could potentially focus more on some of the crosses. I have here CAD yen. This one is very interesting. Why? Because Bank of Canada, as you know, they hiked to 4.5%, if I'm not wrong, 2 weeks back, and they said that they will stop now. No, who knows if that would really be the case? But even if they will say they say this, it means the speculators are probably betting that that maybe they will stick to the dovish plan, and if that's the case, Canadian dollar will lag compared to others. So looking at CAD here, I think that we are in a very nice potential corrective wave for rally. There's a beautiful resistance around the 100 area. Okay, why 100? Well, there you have this obviously former wave 4 to lesser degrees. Okay, then you have this wave 4 that equals to wave 2 in that area. Okay, and also you already see prices in a wave C. Let me also make comparison of wave A. Make this black. Okay, wave A compared to wave C. Okay, that will be around 99. So 99 is the first resistance, then is 100. And I think that that's very beautiful bearish pattern. And validation level clearly is at 104.54. So the idea is Bank of Canada paused the rates. Inflation in Japan is still going higher, and it means that maybe they will be forced, Bank of Japan, to remove the yield curve control maybe this year, and that would be bearish for yen crosses Canadian in general. Okay. Now let's take a look also, as we said, on cryptos. Okay. Firstly, I will take a look on Bitcoin. So I will try not to be too long here. Now we know that cryptos have seen a very nice reversal to the upside after a lot of pessimism last year. So that's clearly not a surprise. We were expecting this kind of a bounce, and what we are seeing so far is a very nice extension to the upside over the last few weeks, actually since start of the year. And what I see here is that wave 3 potentially moving into this resistance, not really breaking higher. The market is struggling here around 24,000. The upper resistance level is 25,300. So I think that this area represents the top for wave 3, and that we could see a wave 4 pullback. And this obviously makes sense if we consider that US dollar index here is breaking higher, could potentially be moving into this corrective phase. So until we see this ABC completion on DXY, that's how long this correction could take us lower here on Bitcoin. So I think that this is a way for very nice support, definitely around 20,000, 21,500. So that's the area for new potential bounce. Also, that's the support here of the previous wave 4 high here. So whenever you see a broken level, this could be tracked very closely for potential new support here on this next dip. Also, if we take a look on the Ethereum, this one also, in my opinion, is bullish, unfolding some very nice impulsive bullish sequence. Could see more upside. We are now slowing down at the temporary resistance here, but I would be looking for potential longs on the next higher degree correction. Now supports clearly will be at the former wave 4. Now first support 1,550 and $50 lower. So that's the ideal support. Also, I have another wave count that I prepared earlier here, which actually shows that maybe we're still in late stages of this wave 3. And the idea why I'm looking for this is because notice that this base channel, okay, was broken here back in mid of January. Normally, this kind of a breakout confirms that you're in an extended wave. And after the next pause, you will typically see that wave 4 can retest this same channel, and this didn't happen here. So in my opinion, there's still going to be a very nice support if we see a dip into this area. So this can be very attractive levels. Maybe some kind of wedge then could be forming to make a top for wave 5 or 3. So even if it's bounce here, I would not be too excited about it. I still think that there can be some higher degree correction. Definitely you should pay attention to something similar like we have seen in this wave 2. And also I have here Bitcoin futures. Now this one is pretty interesting. Okay, so here we have this gap from mid of June, January. Okay, and notice that this gap hasn't been filled completely yet, so still very attractive level, potential bounce zone if we can achieve that level. And also notice this volume here, it was back on Wednesday, June 18th. Okay, okay, no, January. Why I'm saying June? Okay, so this again, very attractive level. Normally, when you have a massive volume here, uh, it can represent an interesting support if the price retraces back to this area. So the whole zone down here can be very attractive, in my opinion, for the next bounce in price. Okay, now we are already running this webinar for 35 minutes. So again, if you're a first time visitor, please subscribe to our channel, press a like, leave us a commentary. Any questions you may have, let me know. Now I will also, which I do not cover regularly, I will look at Apple and MD. Let me just, we covered, I think, MD 2 weeks back or so in the webinar. Okay, where I have single stocks. Okay, so firstly, since I have it open, let's take a look on Tesla. So Tesla, as you know, has seen a pretty nice extension to the upside after earnings report, and looks like that's ongoing impulse. So in my opinion, there could be more upside coming. I'm looking at these short-term swings here, some very nice, beautiful price action. But again, if you're bullish this one, or maybe you want to look for potential entries, keep in mind that we are now approaching some serious resistance levels here. Okay, that was the lows here back from October of last year. It broken through, it acted as a resistance. Now you are again here. Maybe we see some fake out here, failure break to the upside, and then a reversal. But definitely, I think it's worth to keep an eye on the next pullbacks here for much higher prices. Okay, and again, support clearly could be somewhere in this channel, or maybe at the former, or at this wave 4 of 2 lesser degrees. It depends really how strong this wave 5 will be seen. If we'll see an extension to the upside, then obviously this previous broken or very important pivot levels could be a new support. Okay, but so far we are not breaking out yet. Also, let me just switch. So I said MD. Okay, last week, not last week, 2 weeks back, when we covered this one, we also highlighted the bullish picture because we had a very nice, beautiful 5-wave recovery from the lows and then a deep corrective pullback. Now it looks like that we are in a new impulsive sequence. Notice that price is already breaking this upper line of this base channel. So this can be very significant. Could see more gains away from here after the current pullback. Looking at the 4-hour chart, looks like that we could be maybe in a wave, sub wave 4 here of an extended wave 3. So supports at this upper line, lower supports that should hold, should be around $79 to around 80. So that's the area that should hold. Okay, if we break below that and maybe even trying to pass this 72, then I'm afraid that this would be turning bearish, not very bullish. So 79 is a very important level, at least for this week. Okay, but at least for now is still bullish, looking higher until we complete this sequence. But as I said, if we break these levels below 79 and later on 72.50, then everything is changing here. Now let's take a look on Apple. Okay, I think we shared Apple here on TradingView, and we post a lot of ideas. So if you're not watching this, maybe you could look for some of them where we post maybe every second day or so. So here we've been tracking this corrective price action. We identified potential supports around 115 to 130, and looks like that we have a very nice, beautiful reaction to the upside. More importantly, we broke this resistance line. So that's, in my opinion, is an impulse. And after earnings reports, we have seen an extension to the upside. What we are now trying to slow down at this temporary resistance, not really breaking out yet. So if stocks, if maybe like the S&P 500 and DAX, as I said earlier, we'll see some kind of a pullback. Maybe this one will also see lower prices. So I would keep an eye on this gap after earnings. So 145 is definitely a very beautiful support after the next fill. A deeper one could be around this trend line. So overall, I just think that that's an impulse, and the next corrective, the next setback will be corrective before we continue even higher. Okay. Okay, traders, I hope that you enjoyed this webinar. I hope that you again will join me next time. I think that we will schedule another one on Monday, like each time this year. So if you have any questions, anything, if you're interested in our website, check our links below these webinars, and